42nd annual meeting for the investment community. It's great to see a lot of familiar faces that I've seen before when I worked in IR back in the 2004-2007 timeframe, and so it's great to see you again today. I lead the Global Investor Relations team, and I'm very excited for this meeting today. You all are familiar with our forward-looking statement that we must show you for the meeting today. Also, I wanted to share with you that all of our information is going to be available on our corporate website at stock.walmart.com. And as always, at the conclusion of the meeting, the Investor Relations team will be in the offices this week to answer any of the calls that you have. With that now, I'd like to welcome to the stage our President and CEO, Doug McMillon.
Good morning. Thanks for being here. Hopefully this is handy for a number of you, and we'll get your feedback after the meeting to let us know whether you like doing it here or Arkansas, or you want us to bounce back and forth. But we're excited to be here and to do things a little bit differently this time. Before we get started, I want to recognize a couple of people. You heard last week that Charles Hawley has made the decision at the end of our fiscal year to retire, and Charles has been with Walmart for more than 20 years. He's had all kinds of jobs, helped build the international business, has been the controller. He's just literally done it all, and since 2010 has been doing this job. And he was willing to hang around a little bit to help with my transition, so he actually stayed longer than he originally intended, and I really appreciate that. He's been a great partner. Would you please join me in congratulating Charles on his retirement? He'll be up in a few minutes, and if he makes any forward-looking statements that I don't agree with because he's not going to be here, I'll jump up and tell you what those were. We're also excited to announce that we've got an able replacement to step up in Charles's place, and Brett Biggs has been with the company for just a little over 15 years. Like Charles, Brett has had a lot of different jobs. He's worked in M&A, he's worked in Treasury, he's been in Walmart International as a CFO most recently. Before that, he was a CFO in Walmart US. And even for a little bit of time, we asked Brett to go learn how to be an operator. And he took on a responsibility in Sam's Club to run a big group of our stores and did a great job doing that, further developing his leadership skills. Would you stand up, Brett, and let us recognize you and congratulate you on your promotion. We've been listening to you and have tried to set today up to answer a lot of your questions. What we're hearing from you is we want further detail, more refined detail around your strategy. What is the plan to win? Is it credible? And can you do it all? We've also heard you clearly say we need to know more about the numbers. Tell us about the financials and help us see out a ways. So today we're going to do things a little bit differently. I'm going to kick off the discussion by talking to you about our overall strategy as a company. And then Charles is going to come up and talk about our financials and talk about more than just next year. Given that the transformation that we're leading in the company is going to take more than 1 year, we think it's appropriate at this point in time to give you a further look out. So he'll be talking about forecasts related to growth, profitability, and capital for the next 3 years. And he'll comment on our share repurchase program for the next 2 years when he comes up and takes the stage. Following Charles, we'll have a focus on Walmart US and e-commerce. So Neil Ash and Greg Foran will come up and talk about those businesses. We decided to focus just on those two big segments because that's where most of the investment pressure that we're putting on the company's earnings are appropriately tagged. So big investments in Walmart US, big investments in e-commerce. We wanted to go deeper there, answer all your questions about those businesses. Clearly, Sam's Club and Walmart International are really important to us, and they will be reflected in the total company financials that we cover with you today. But our thought is we'll come back at another time and have a focus on Sam's, have a focus on International, and let you ask us questions about them at that time. After the two of them speak, I'll come back up and say a few things, and then eventually, before too long, we'll come up and answer all your questions so that you can fill in any blanks that we have not addressed. Let me kick off today's discussion by talking about the overall strategy as a company, and I'll remind you that I'm going to speak from a global view, not just the United States. Here's the key point. Walmart is uniquely positioned to win the future of retail. We have a combination of strengths and assets to build on, and we're preparing the company for the future. Our investments in people, our stores, and our digital and e-commerce capabilities are the right ones. Let me set some context. We all know that retail has changed and will continue to change at an accelerating pace. We also know that what we did in the past wouldn't by itself be enough to win with customers. Competition is strengthening. Pure e-commerce businesses move fast, innovate well, and run on lower margins. Hard discounters run on lower levels of profitability, and they're growing quickly. We know there's a lot more change to come, and we're motivated by it. Competition is good for the customer because it makes us all better, but it's also fun to take advantage of the opportunities that are presented. Retail history is very clear. Those that are unwilling or unable to change go away. Those that get ahead of the curve will thrive. That's why we're taking decisive steps now to change and grow our business. We can deliver stronger financial performance in the short term simply by running our core business better, but that won't be enough. To win, we must run the business well today and change the business for the future. We will lead and not just manage. We have work to do, but we're coming from a position of strength. We have assets any retailer would want. Globally, nearly 260 million customers shop with us each week in stores, clubs, and online. We have a well-developed supply chain that we're strengthening for e-commerce. We have a reputation for value and are trusted around the world. We have a strong culture and more than 2 million dedicated, hardworking associates. And we have strong cash flow. And we're changing. When we stood before you a year ago, our sense was that we hadn't been changing quickly enough or boldly enough. So we've been investing to get stronger and faster. Specifically, we're investing in people and technology to evolve our customer experience to serve them today and tomorrow. Now, we made a significant commitment to our store associates this year and next. We took a leadership role to increase wages and to get the talent we need. It was the right thing to do. We also changed our U.S. store structure to create more ownership among our associates, and we're making changes to our training and scheduling programs. In our U.S. supercenters, we had leaned too far towards expense leverage. Greg took on a big job about a year ago, and we're making solid progress. I've been out in the stores these past few months, and I try to always ask our store associates and our store manager at the end of one of my visits, what is it that we can do for them? What do you need from us? And I've been hearing a really consistent message lately all over the country. One of them recently came from a store visit to Ames, Iowa. We have a supercenter there with a manager named John, and John didn't know I was coming, and we got into the store. It took him kind of a couple of minutes to get his bearings, but as we turned and started walking down the Action Alley in front of Ladies Wear, we saw a department manager walking out on the floor, and he stopped me unsolicited and said, you know, what we're trying to do is working. Our additional department managers, what we've done with wages, with structure, and the other changes is resulting in the ownership that you're trying to create. And I was so encouraged by that because that's ultimately what we're trying to do with our store associates. For those of you that have been following us for a long time, you know that when our department managers take ownership and run a store within a store, that part of the store looks better and runs better, drives more sales, has happier customers. That ownership is what we're after. So the steps we're taking are making a difference. And when I hear store managers around the country say to me, you've done it all, it's on us, we've got your back, I'm really encouraged by that, and I'm hearing that consistently. Our people really do make the difference. Now, we've also been building an e-commerce business. We've been hiring top technology talent in Silicon Valley and around the world, refreshing the customer experience and becoming a true internet technology company. We're now one of the top 3 online retailers by traffic, and our Walmart US app is among the top 3 apps in retail, with tens of millions of customers downloading it and using it regularly. These investments are critical to our future, and they are core to our strategy. We are excited about the opportunity before us and our plan to win. We have a growth strategy that leverages our strengths. Here's what we'll do. First, win with stores. We know customers love shopping in stores, and they'll want great stores tomorrow. And why wouldn't they? The chance to interact with products, to see something new, to look at an item, touch a fabric, smell something, see a color. It's important to them. The opportunity to buy something and take it home right away is satisfying. Now, stores will be different, and those we operate today need to change, so we'll keep refreshing them to make them relevant for the future. They'll be more convenient, for example, whether it's a stock-up trip or a top-up trip. The in-store experience will be critical, which is why our investment in people this year is also a bridge to our future. These things are not unrelated. Second, we'll add capabilities to our supply chain. It's been one of our most important strengths, and we're working to morph our supply chain of today to enable us to win in the future. Today, most of our distribution centers were obviously built for the purpose of serving stores. We're changing that to have a stronger each capability for moving individual items. We will connect our various types of DCs and stores and improve our inventory accuracy and efficiency. Optimizing the inventory in our system is a huge lever to serve customers better and to take a lot of costs out, not only through transportation and handling, but also through markdown elimination. A dynamic, connected supply chain with improved forecasting, leveraging predictive analytics, can serve customers and reduce costs by merging truckload, pallet, case, and each movement. Accurate inventory placement is a really good way to make money. Later this month, we'll mark the 10th anniversary of Lee Scott's Leadership in the 21st Century speech, which set us on a path towards becoming a more sustainable company. Our holistic supply chain is a huge part of that. Moving forward, our supply chain will be an even more effective asset if it is resilient and more sustainable. We are actively engaged in reshaping the systems in which we work. We can not only strengthen our business, but use our scale and our capabilities to make a real difference in the world. We look forward to updating everyone in more detail on our sustainability journey and vision in the coming months. Now, in addition to winning in stores and with our supply chain, we will build deeper digital relationships with our customers. As we grow stronger at technology and innovation, we will become competitive against the best digital players. We have the team and the resources to do it. But that's not where we win. We win on our unique combination of assets. Our opportunity to build digital relationships with customers in ways that are seamlessly integrated into their lives is an important one. And we're building that relationship today through our improved site experience and apps. Tomorrow, we'll build it through an enhanced store experience, including how they find items, how they pay, and how they check out. When you add it all up, here's our plan. We'll be the first to deliver a seamless shopping experience at scale. No matter how you choose to shop at Walmart, in stores, online, mobile, or a combination of them, it'll be fast and easy. We're uniquely able to save customers time and money in any channel and blend them together. We'll give customers what they want in a way that works with their lives. At some point, they won't even think about how they ordered it or how they shopped. And the lines between shopping in a store, picking up an order at the store, or having it delivered will just fade into the background. Today, we're seeing e-commerce companies test stores. It's because they see the same customer desire that we see. Here's a key question. Will it be easier for an e-commerce company to build out a massive store network and create a customer service culture at scale? Or are we better able to add digital and supply chain capabilities and leverage our existing stores? We like our chances. As we do that, we'll grow what we call the sweet spot of our customer base. Our best customer shops with us not only in stores, but also online. They spend more, shop more frequently, and give us a higher share of their wallet. If you look at these circles, you see our average store-only customer in Walmart US spends nearly $1,400 a year with us. The average online customer spends a little over $200 a year. But the customer who shops us through multiple channels spends more than $2,500. These are the customers everyone is chasing, and we already have a relationship with so many of them. This overlap will continue to grow. Eventually, it will be our biggest revenue segment represented on this slide. It's a big opportunity. As we build and deliver this seamless experience, we are positioning for growth in areas customers want most. We see clear trends around the world that offer huge opportunities. I want to take a minute and walk through where we're leaning in. Let's start with price leadership. We're rightfully known for value. Our purpose of saving people money so they can live better is real, and it matters. We made a choice, though, to first invest in technology and people, and those investments are putting pressure on short-term earnings. The large investments this year and next in store experience, operational improvements, and wages will ensure we get the sales lift we deserve for lowering prices further in the future. To put it more simply, you clean up your house before you invite people over. It was smart to improve standards, in-stock, and checkout speed before just leaning on price. Greg will also say more about the work we're doing with private brands to offer savings to customers. We represent value, and private brands will be a key part of our future. The second growth area is convenience. Wasted time is a cost to the customer, and we can help them save here too. E-commerce is inherently convenient. By broadening our marketplace assortment, creating better websites and apps, and using data and personalization, we're offering customers better choices every day. And we see a huge opportunity through pickup, particularly in grocery. The combination of a digital relationship and stores is a winner. The customer response to ordering groceries through online and mobile and then picking up in the parking lot has been tremendous. Here's one example. I want you to meet Carla. A few weeks ago, I was on a store visit. I was in Huntsville, Alabama. As soon as we got to the store, I saw a pickup area that we had recently added to the front of the store, and I saw a customer up there picking up the order. It was early in the morning. So I walked up to Carla, and just after a few seconds of her talking, I asked her if I could take out my phone and record the conversation. She said, no problem. What you're about to see is spontaneous and unscripted from a few weeks ago. Meet Carla. So tell us your name.
My name is Carla Johnson.
And Carla, is this your first time using the pickup here at Walmart?
It is, very first time.
And how's it going?
It's great. Y'all do it.
Saving you some time?
Check it out. It's saving me a lot of time because I have a 1-year-old and I just got all my groceries for the month and they brought it out to me, and that's less hassle for me because it takes a lot to get him out, out of here and then going into Walmart. And again, I forget something every time. So I took my time and ordered, and I have everything I need. So I didn't forget a thing.
Do you normally shop here?
Yes, always. So.
Well, thank you for your business. Any advice for us?
Any advice for y'all?
Yep, how to get better?
Keep it.
Thank you very much. Nice to meet you.
Thank you.
Sometimes I dream about 260 million customers being that happy all the time. And what kind of a comp increase would we really be running? I mean, that was just a lot of fun. And it truly is representative of the behavior and the attitude we're seeing from customers as we expand on this test that we've been doing and start to scale it. Online grocery has the potential to bring in meaningful amounts of new customers. In the last 6 months in Denver, 1 in 4 of these customers is new to Walmart. 1 in 4 new to Walmart using grocery pickup. Another cool dimension of this is that we can combine online grocery shopping with the full breadth of our assortment. One customer I recently met was over the moon about the opportunity to pick up her back-to-school list with her groceries all in one stop. Order on the app, pick it up all together. She's absolutely pumped. It's a key differentiator for us that customers can eventually pick up a snow shovel in the winter with their milk and eggs without getting out of the car. Neil will share more about our plans to continue rolling out this service, and we're all really excited about it. Neighborhood markets also offer convenience. They offer the easy access of a local grocery store with the endless aisle of Walmart. We've continued to refine the format, and Greg will talk about the new neighborhood market that we opened just last month in Rogers. It happens to be across the street from the very first Walmart store that Sam Walton ever opened, which is cool to walk out that store, look across the street, and see that location. I posted a photo from that store's fresh food department on Instagram because that's the area we are most focused on improving, fresh food. Positioning for growth also means being great merchants. We're aggressively pursuing the opportunity around fresh foods and health and wellness. The projections are for $2 trillion in global growth over the next 5 years in these categories. At Sam's Club, we doubled our organic offerings last year. At Walmart US, we're growing at double the rate of the industry in organic produce. But we still see more upside in our presentation and our assortment, and we're on it. We'll also continue to win in general merchandise and apparel. And our recent sales performance in those businesses has been lifting the box, raising the average. Our core merchandising strength gives us an advantage, and we've got to keep that going. Our fourth driver of growth is to be strong in priority markets. We will win in the geographies where customer spending is growing the most. We have a sharp focus on North America, and particularly in the United States. Our U.S. performance drives the company today, and it's a strong source of growth for the future. The Supercenter is the greatest format in retail history, and it will continue to be a huge driver of our growth and profits. Yet we have the opportunity to reimagine the Supercenter, to refresh it, to ensure that the format remains strong long into the future. The other market we're prioritizing is China, which will be home to 25% of total retail growth over the next 5 years. As the middle class continues to grow, we see an incredible opportunity, and we've been putting the pieces in place. We've now built a supply chain that supports the parts of the country where we're focusing. We've improved how we run our more than 400 stores and clubs. And this summer, we acquired the remaining shares of our e-commerce business, eHowdian. We have a unique opportunity and a plan to put it all together to win in China. The final growth area I want to highlight is appealing to a blend of income levels. Globally, we know growth will disproportionately come from middle and upper income households in the years ahead. In markets where we have a presence, middle income households are projected to drive 50% of total retail growth. Today, we appeal to value-oriented customers in all brackets. This slide shows a distribution of household income in America and shows how our shopper matches against it. Please take a close look at it, because frequently perception does not match reality. By taking the steps I just outlined, we're going to increase our share across this whole curve. Areas like fresh food, grocery pickup, and neighborhood markets appeal to a broad range of customers, and we want them all to shop with us. By now you may be thinking, can we do it all? Can we transform the company in this way in every market and business fast enough? Do we have the talent and the capital we need to deliver this seamless shopping experience everywhere we operate? No doubt our business has become both large and broad. It's more important now than ever that we evaluate our portfolio. We've exited businesses before. We were the largest full-service restaurant operator in Mexico, but we sold that business last year. We used to be in banking in Mexico. We aren't anymore. We operate a property company in Chile that's now on the market. We've closed stores across several markets, and we will continue reviewing our fleet in a disciplined way, and we'll close the stores that should be closed. We won't let the breadth of our business distract us from our most important priorities. But we don't believe in shedding assets in a hurry for less than they're worth. Value and timing matter. We're more than open to reshaping our portfolio, but we'll be smart about it. Now, today you're going to hear a lot of information through all of our presentations, and as you listen, I'd ask you to focus on these key takeaways. We know where and how we're going to win. We'll be the first to deliver a seamless shopping experience at scale, and we come at this work with unique strengths. Second, we can grow sales at a rate that's faster than the market. Third, we will be disciplined with our capital. And finally, we'll come out of this investment period with strong returns for shareholders. Charles will say more in a moment, but I want to address this as well. Our investments in people and technology will continue to pressure our profitability in the near term, especially next year. We will then be positioned to be competitive with an attractive level of profitability. And we understand that the dip requires patience from our investors, and we want to be very clear. These are the right investments for our future. We see an exciting opportunity to drive sales today, invent tomorrow, and ensure sustainable growth. Over the next 3 years, our dollars of sales growth will be like adding last year's combined annual revenues of Netflix, eBay, Whole Foods, and Starbucks to our top line. Netflix, eBay, Whole Foods, and Starbucks. Last year annual revenues, we'll add that in the next 3. This is a growth company. It just happens to be a really large growth company. I'll come back up in a little while for Q&A and wrap things up, but now I want to hand things over to Charles Holley. Please welcome Charles.